Alrighty, good evening everyone. Good to have you with us this evening live if you're on Zoom with us right now, otherwise watching the recording later on YouTube. So tonight guys, we are diving into some pretty cool stuff. I've had a few requests to go through my daily checklist for how I approach the charts first thing before I start a trading session. So we're going to go through a bit of that. At the same time, I'm going to give a full walkthrough as to how I use the Fibonacci drawing tool and what fibs even are. So tonight's gonna be loaded. Dad unfortunately is not doing very well, so all praise appreciated in his direction. He is man down and not able to talk with a sore throat that he has, so I'm not sure if he's gonna sneak on here and be checking on me. I don't see his name in the chat, so I think we're safe, but I promise tonight is gonna be absolutely loaded. So buckle up, get that notepad ready, and let's dive into it. So I'm gonna start by sharing my screen and we're gonna get into a little bit of the basics of what the heck Fibonacci is. It's obviously baked into everything that we do with trading and with TrendForce, but I'm going to give some of you a little bit more of a walkthrough because some of you may have seen me draw with the Fibonacci tool before, but tonight you're going to know exactly how I use it, why I use it to find retracement zones and price extensions, and I guarantee it is going to blow your mind if you have never fiddled with this tool before. So let's crack into it this evening. I hope you're all doing super well. Great to see a bunch of you on here live. Let me share my screen and let's start over here. So daily checklist, I have got this here. So first, we're going to come back to this in just a second. Let's start with the checklist because I know this makes a lot of sense. Fibs is going to be somewhere in the middle. So very first things first, when I approach the charts in the morning, I'm pretty sure you can see my trading view screen right now. At least I can see you. Can you give me a thumbs up if you can see my screen? Awesome, thank you. I can see that. So I'm just got a gold chart in the background on the weekly, but for now, let's go through this. So when I first show up to the charts in the morning, the very first thing I'm going to do in the pre-game, I've split this up into pre-game and the game itself and then post-game. The very first thing you're going to want to do is go and check the news. forexfactory.com. You want to make sure there's no red folders showing up inside the time that you are trading. So forexfactory.com. So this is what it looks like, just forexfactory.com. When you load the page for the first time, it might look like this, and so you're looking at these news events here with the dates. You can set your time zone and all those wonderful things. This little green button gives you the filter. I've just unticked all these boxes. I only really care about the red folders. Sure enough, there might be a random other one that does something crazy, but it's not all that common. Then you want to click more, and it's going to show you all the red folders for the week. So you can see we've got quite a big week. We've got CPI news, which is pretty big, some employment stuff, although Australian employment's not probably going to shuffle the charts that much. Sorry, Aussies. But otherwise, core, PPI, all these different things. If you want, you can click on the folders and get a bit more info for them, find out what it's about. But all you got to know is if there's a red folder at that exact minute, you can expect some fireworks on the charts. And you want to make sure that you're probably not in a position right before those fire off because they can sometimes create gaps and gaps can leap on the other side of your stop loss, which I'm not going to get into explaining right now. Otherwise, we'll head in a completely different direction for the evening. But let me shift back to trading view. So there we go. So first things first, you want to check the news. Next, once you have checked the news, you want to check higher time frames. You want to zoom out and see what the heck is going on. So when I first approach the charts, my setup will look like this. I mean, you're seeing my entire trading view setup right now inside the app. So you can see all my different tabs at the top. This is everything that I use. So I might start on this page here. I don't use it as much anymore, but I've got gold on the top left, the DXY, which we'll call the Dixie sometimes. It's basically the US dollar versus everything. And you can see there's a bit of correlation between the way that gold and the DXY move. So we'll talk about that later. I've got the NAS in the top right corner and the US 30 in the bottom right. And these are all on the 5-minute chart, just so I can come and see what's going on and, very quickly go, okay, wow, this is happening or that's happening. Then depending on what I see from here, I might go to a US 30 zoomed out chart where I've got it here set to a 15-minute. If I want to see that, and I might, start going, okay, maybe, well, there's a gap down here from the open I've already identified. Then if I want to trade the US 30, I go to a separate one where I've got my 8, 3, and 1, and I'll be executing off the 1. And so that's basically where my execution looks like, but let's just stick with the high time frames for now. So I've got the exact same setup for the NAS. I've got a zoomed out chart there on a 15-minute, and I might adjust this to a 1 hour or whatever. Same thing, I've got a triple split there for that. Looks like the NAS is just dropping right now and hitting TP3 as we go. What's the time? We've got London that is well and truly open, breaking lows. There you go. Hopefully some of you guys are making bank on that because we are red on the 3 time frames higher. We're red on the 8-minute. That would have been pretty damn good looking signal. Hopefully someone, I can't see the chat right now, but hopefully someone made some bank on that trade on the NAS. Next, I've got one tab specifically for the DXY. I'll come back to that later. Then I have got a very zoomed out gold chart. So this one looks a bit busy because this is like my chart that has got all my nonsense on it. But I will start usually on, let me do this. Let me hide all these drawings. And for me, the daily is more than zoomed out enough. I don't usually have to check this every day because I kind of know what's going on here. I'm familiar with what it looks like. So I'll drop down to a 4 hour. Somewhere in there, I'm going to start putting on TrendForce. But initially, I'm just kind of looking to see, okay, well, we've had this, you know, double top slash bit of a head and shoulders, a bit of a breakdown, a push back up, and a fail over there. Like basically, if there was a trend line between there and there, we broke down. And so I'm taking note of the MACD on the higher time frames too. I'm saying, okay, right, we are red, we're underneath. I might actually turn on the indicator itself and see, okay, right, what's going on? We had a counter trend signal, which has come down, and then I'll just drop lower. I'll go to the 1 hour, see what's going on that. And it's pretty similar. We had that sell signal fire off, and that's come down. And, you know, just taking in, I'm wanting to zoom out and really see what is happening before I zoom in like crazy to, you know, the 1 minute chart. And so the 1 hour right there, again, I'm looking at that MACD and just check, okay, we're green, we're pretty wide. So for the last, since 5 a.m. this morning, we've actually, the MACD's been coming up and it's kind of widening. It's bright green. And yeah, there is definitely the chance there's some bearish divergence there. So there's the chance that we could reject and push down, but I'm not going to do a lesson on divergence tonight. So 1 hour, then I might drop down. I don't really hang around a 30-minute much. I'm just kind of scoping through in case I see a different pattern that might drop out at me. Then I'm on the 15-minute, and now this, I will, well, you know what? I've actually just skipped ahead. I've got all these different tabs on mine. So there's a 15-minute, there's an 8-minute, there's a 5-minute, and then I'll drop down to one that I have that's for 1 minute only. And this is how I really like to just see if I want to see everything zoomed out on whatever 1 minute chart I'm on, I'm there. Otherwise, I've got my split here as well. So I've got my 1 minute on the right, 3 in the middle, and a 5, sometimes an 8 on the far left. But that initial zoomed out one, I like to leave that normally on the 1 hour, maybe the 4, and just leave that over there. So I've got some big perspective. I can see, you know, very quickly if one particular candle is about to close, you know, in 49 minutes, or see what kind of shape it's going to close in, or if we're closing above or below a big moving average on the 1 hour. But if I know when the time is, then I can always just look at my 1 minute chart and go, okay, at the exact stroke of whatever that 1 minute was when we went to 8 p.m., which was there, you know, that candle, okay, well, we closed, you know, nothing too significant, to no changes, like we're not above or below the 4 hour trend zone, anything like that. You can see we obviously had a nice double top rejection of that, and now, you know, potentially coming down. We'll see. Bit of a mixed bag on the old trend table right there. But for now, we'll move along. So coming back to our checklist, check those high time frames, daily, 4 hour, 1 hour. I just went a little bit beyond that. Next is Fibonacci for me. And so I'm going to go into more detail on that soon. So I don't want to spend too long on that, but that's when I'm going to potentially look at, where was that one chart? This one, put my drawings on, turn the indicator off. I might draw some fib zones to just double check on what's going on. And we'll get into that again in more detail. After that, I'm going to look for those key levels with the sessions indicator. And that for me will primarily be on the 15-minute chart. It's just way easier to see with a little less noise going on. So that'll be this one for me. At this point, I've still got the indicator turned off. And I'm only going to have, I'll turn off those drawings for now, the sessions indicator. And I'm looking to see, okay, so in the last, you know, we've basically just been tracking sideways really since this big drop down at the end of last week. So Saturday, our week closed over there. And then our week opened on Monday and we fell off a cliff, went sideways a little bit, fell off another cliff during London. And we've just been grinding sideways, even through New York. Like that is a very odd thing to me to see our entire New York session, you know, just sideways and inside like smaller trading volume up and down than London. And then Asia being bigger than New York, also pretty wild. There might have been a public holiday. I don't even know. It wasn't looking much yesterday. But I'm just taking stock and seeing, okay, where are we? Like what's happened in the last 24 hours? Because I'm pretty aware of what's going on. If you're checking the charts in only in the mornings, then you've got a bit more to catch up on. But I like to, you know, maybe have a glaze at lunchtime or the evening and just check what the last few sessions have looked like. And then drawing those highs and lows. So I've got too many drawings on here with the fibs, but I'm basically just drawing lines on top of those sessions. So let me hide those drawings again. I'm just drawing those lows like there, and I'll have other ones that we would have already tapped into. So that low of London, I already know we came down and pretty much perfectly tapped into, you know, this area of liquidity down there. Or is that other one? That was a better one. Yeah, anyway, coming down, and I'll have all these lines drawn horizontally to know whereabouts we are. And I've done a whole session on the sessions indicator, so we won't spend any longer there. We want to get to fibs. Then after that, we're in the game. There's game time. Now we're actually looking to trade. So then I will reread the rules to myself and also some of Tom Hoggard's just with the best loser wins, and reiterating those rules to everyone right now. You should all have them in front of you on your desktop like Mark, but you want to be having these rules in front of you or know them off by heart. So obviously our rules spelling out TAS. I'm looking to my right because I've got them on a different screen. But number one, we've got trend zone alignment. We want to be seeing the trend zone alignment between obviously the main indicator and also our MACD. But really, that's now pretty well covered for us. But we want to look 3 time frames higher. So if you're trading off the 1 minute, you want to be looking on the 3. And if that's in alignment, you're going to get a point. Then you want to be checking that angle of the 21 moving average, 3 time frames higher as well. And now we have a light for that in our trend table, which is awesome. And then we're looking for space. We want to make sure that we've got space at least to get to TP1. So I want to jump back to TradingView and even just have a look at that one that we were just looking at. Let me get back in there. Jumping back in here. Where was the NAS? That would have been this one. So there we go, TP3. And if I like to do this, like if I've shown you guys this before in our live sessions, but I like to draw a vertical line on the signal and then sync it globally so it shows up on those other charts. So I can actually just look at it and take stock and go, yeah, okay, did we have trend zone alignment? So we've got a sell signal primarily because we're already there. 1 minute's good, MACD's good, we're red, trend table's looking pretty red, zone alignment not perfect, but we've got enough. Then we've got, you know, we were red obviously on our trend zone there, we're red on our MACD, and even on high time frames too. So we definitely got a point for that. The 21, 3 time frames higher being here on our 3 minute is pointing down, and you can see on our trend table as well, whichever one you look at, the 21, it's got a red dot, meaning it's pointing down. And then that final one was space. And so obviously this one, we may have not actually gotten space. I didn't see when it went off because we would have, this is the red zone right beneath us. It is red now because we've broken underneath it, but it might have been green. So actually, to be fair, we may have not had space because of these previous lows, but depending on what was happening, you know, that's the hard part, is you have to go into replay function. I like the fact that there was a trend line there that was broken on that sell, and there was a cross down, obviously with our triangle. So, you know, riskier, but potentially could have still been an option. It still hit TP3. So anyway, that's enough of that. Getting back to our checklist. So that's when we've read our rules, and that was us looking at the rules on an actual chart. Then we're trading with TrendForce. So that is obviously the checklist I'm going through to get to the point of actually pushing the button and getting on my execution, you know, page, whether it's gold or whether it's the Dow or whether it's, you know, the NAS, whichever one you're trading on. You're getting to the point now where you're actually looking for an entry. So jumping back to that checklist, while we're actually in that trade too, you want to make sure if you're trading gold, you're always checking the DXY. So that's why I've got my execution, my 1 minute chart here for gold, which is nice and big. It's nice, hitting TP2 already right there. Then I've got my 3 minute one here, and this is actually where I'm usually trading, and I've got this normally a bit bigger. I've kind of compressed things a little bit to make them fit on this recording, but I've got quite a silly widescreen 40-inch monitor, so I can have things a little bit wider than I can fit nicely on Zoom or on YouTube. So I'll have my trading panel open on the right-hand side, which isn't open right now. And then I'm looking, when I'm actually executing, I'm very aware of what's happening on that 3 minute and that 5 minute as well on my left, possibly the 8. And if I want to change maybe to Fibonacci, I'll do that over here, or I might just leave that on this one right here so I can just double check. If I want to see more of the 1 minute, I can look and see, wow, okay, we're underneath, obviously ZA, our zone alignment's out, we're orange, because we're in between moving averages. We're underneath teal, which is a 4-hour trend zone. We're on top of the 233 still, which is great. And we're on top of pink, which is our 1 hour trend zone. But because we're underneath teal, we're still orange. So once we get above that, we could have some more fireworks. We could be heading back up, because right now gold has got a lot of space. Obviously we've come down, but it's got to make a decision whether we're going further down or back up. So when I say you're trading gold, you want to be checking the DXY, because you'll often see, let me turn the indicator off. Like I said, that correlation on this chart between, you know, gold going up right here and the dollar going down, you'll see a lot of correlation between the two. And sometimes with the NAS and the Dow as well, but there's definitely some correlation between gold and the DXY. So I have this chart open specifically just for that, to be looking at the DXY. That's a 15-minute chart. I might change that to a 5 if I'm looking closer. I mean, obviously we had this big rush up earlier today, and if I put the sessions indicator on there, I can see again, okay, so during London, last night, the dollar got some strength, and New York, again, didn't do much. This tells me New York was on holiday or something. And then now we might come and fill the imbalances in there. We'll see. But I just like to keep tabs on that DXY if I'm trading gold. So that is on that checklist to definitely be checking that. Then say you're done trading for the day, you've whatever you've done, whether you've taken wins or losses, the most important thing to do after that is to actually review. You need to review those trades. So that's the last thing on this list. And so that's why if I am trading, let's just think of an example right here. I'm going to try. So say I took, I've got my short position, we've got my toolbar up here. I've got long position on there. I've got short position on there, which you can find on the far left, which you should already know. By starring it, it's going to be on your favorites tabs. But let's just say I took that long just for the sake of, having something to review. Let's just put the stop on that line. And let's just put that, well, that's pretty ridiculous on TV. Just so we can see it, I'm going to just make it a little bit higher for now. And I've got the settings on this long position turned down super low. So visit on style, you can see I've got my opacity down to like 10. If I drag that up, you're going to see it a bit more vividly. But I don't really need to see it all that clearly. But for now, let's just leave that on 20 so we can actually see something. Put that on 20 as well. And then what I might do, if I took that trade or if I'm in that trade in the moment, I might right click and also sync that globally. So I can just jump on that 1 minute chart and see, okay, that's where that trade is. And then if I even click on my, 15 minutes, zooming in, you can see it's actually still there as well. So I can just take stock of what's going on and where it is. But say I smacked in a bunch of trades, just for argument's sake. Say I also took the short position on the counter trend signal right there, stop loss over there, TP was hit nicely over there, and say that I took I'm looking for like that would have been a loss, like if you took that one. If you took that buy, depending on where that stop was, probably somewhere there. I'm just, you would have gotten stopped out. Would you have even taken that one? Let's just check for argument's sake. Where was that? No, you wouldn't have taken a buy because you can see there on that middle chart that right there, if I just do this and this, sync globally, we were red on the trend zone, red on the MACD, red currently on that 5 minute and red on that MACD too. So you wouldn't have taken that, but just say you did. I'm looking, that's perfect. I wanted to find something like that so you can see in hindsight what your trading would have looked like, sync globally, if you wanted to review. So now I can go to my 1 minute chart and go, what did my morning look like? Or what did my evening, afternoon, whatever we're looking at look like? Sessions, okay, that would have been Asia going into London. But I can go, okay, why the heck did I take that trade? Because maybe you were just tempted to click the button. Maybe you were only looking at the 1 minute chart and you're above the moving averages, but actually 21's pointed against you as well. You only just got a signal really because of something closing above something. And that was a loss. But, excuse me, the most important thing to do is to go back and review and go, why did I click the button? And if you can actually think in the moment, okay, more patience, check the rules. We didn't have alignment. That was just me being dumb and impatient. But what about this one? The counter trend, well, that one obviously paid off. In terms of did it meet the rules, I don't know. I didn't really see. Let's just go and grab that again. But this is what I'm going to do. If it was a great trade, it's quite easy to tap yourself on the back. But it's honestly the losers that are the ones you're going to learn from the most. So obviously counter trend carries way more risk. You're probably not going to get alignment. So you didn't get alignment at all. And in terms of space, you had a little bit of space. The POC may have moved. It may have been there. Otherwise, you didn't really. You would have just gotten that signal closing beneath the 55. And it would have been risky. But anyway, my point being, reviewing your trades, guys. It is so critical to go back and go, okay, win, loss, win, whatever. And just review and ask yourself, why did I take that trade? And if you can come up with some really good reasons or draw from those losses, you're going to gain so much more from your losses than your wins. Instead of just going, wow, there's a trade. Okay, well, the counter trend signal, should we take that right now? Let's just take a look. Let's move that over. I don't know if anyone's trading gold right now. But we can see that we've got a little bit of red. We don't really have, our trend zone here is blue, but the 21 is almost pointing down. So a bit close to that 55, which is pretty much right on it. So we could bounce from here. Definitely not quite enough space to get to TP1 with the green zone. Anyway, I'm just, on the fly looking at stuff. But guys, the main thing in reviewing, if I go back to that list, is just taking the time to review. And if you know depending on how you journal your trades, for me, let me unshare my screen and I'll show you an example, which is a little bit more intense. So I got this, a bunch of us came to the live events. We got some Black Bull journals. You might have a different one. But, in there, I've got the rules written. So I've got our TrendForce rules from when there were 4, now there's 3. There we go. And I've got Tom Hogarth's rules written right there as well. And so I'll read those to you in case you don't have them. But I assume I am wrong until proven otherwise. That is a bit of a lesson in itself. But if you go into a trade thinking, I'm right, you might hang on to a loser longer than you should. And so rule number 2 is I expect to be uncomfortable. And you will be uncomfortable. That's just natural, especially if you're adding to your winners. Number 3, I add when I'm right. So if you are right, if everything's going in your favor and you've got a good opportunity to add to that trade, that's a whole nother thing in itself too. But number 4, I never add when I am wrong. So if trade's moving against you, you shouldn't be, and everything is telling you this is moving towards a stop loss. That is not an opportunity to look to add to that position. That's how people go terribly wrong. So I reread those rules every single morning. But then in terms of journaling, you can see on here, like I've got all sorts of different stuff. Like if this might be an entire session when I was trying some new stuff, like with Tom Hogarth's, I am writing down trades and I'm writing down every single minute that why I'm going to add or why I'm still in this trade or where that candle closed. And so I encourage you, get detailed. Like, look, if you're wanting to really refine things, every single candle is telling you something. And so that's one way to journal. That's me on the fly writing if I'm doing it that way. Otherwise, it might just be screenshotting. I screenshot almost every single trade and I've got folders full of that. And so, I post those in our chats quite often. I don't have a recent one in front of me right now, but I like to just screenshot the 1, 3, and the 5 so I can see that zone alignment with those vertical lines and I can see what's going on. Like I can go back and check and go, okay, wow, there we go. At the end of the week, end of the month, I might go through a whole bunch and go, look, I love going through, especially the losers. It sucks. I don't enjoy reflecting on poor choices in life, but I've learned more from reviewing my losers than anything else, losing trades. So I encourage you guys to do that. So that's the reviewing side, guys. Let me, I'll jump back on there for the one last time before we jump over to doing some fibs. But that, I might screenshot it and chuck it in the chat. But that is the pre-game, checking the news, checking those high time frames, getting into Fibonacci, which we're going to do right now. Those key levels on a 15-minute chart I found is the easiest to draw those. And might even, demo that later on. Game time, that's when we are definitely rereading those rules. So they are fixed in your mind right before you are clicking that button. That's why that is positioned there and not the very first thing. Then it's into trading, checking the DXY for trading gold, and post-game, obviously, reviewing. So that is that for that checklist, guys. Hope you guys got some value from that. I am just double checking. I can't see the chat at the moment when I'm in here. So let me just figure out a way to hit that, and then I might be able to still see it. There we go. Let me just double check I haven't missed anything before we transition to the next phase. Was bright green on the one? Okay, so that was that. Okay, yeah, cool. Thanks, Marcus. That's sweet. That was probably just through that NAS trade earlier. Right, guys, so Fibonacci. That's let's start somewhere else. Before I get on to showing you fibs on the chart, let's just get into a little bit of this first. So there's the news. What the heck is Fibonacci? So if you want to go and read a little bit more, some of you might know all about this already, but Fibonacci comes from a mathematician way back in, I think, like 1200s. Yeah, 1202. There we go. Western European mathematics in 1202. That was the name of his book. His name wasn't actually that, though. Liber Abinat, I think that was the name of his book. I've forgotten his name. It might come up somewhere else. But it's a number sequence, guys, and it goes basically 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, and all the way up it goes. The way you get it is you take the previous number and add it to the current number to get the next number. So 2 plus 1 equals 3. 3 plus 2 equals 5. 5 plus 3 equals 8. 8 plus 5 equals 13, and so on and so forth all the way up. So that's how the sequence happens. And you can see that it kind of gives us these expanding squares and triangles. So you can see the 2 plus 9 becomes a 3, and then that plus that in terms of volume and shape and size. 5, 8, 13, 21. So we get this expansion, which you can see down here, and showing this kind of Koru shape that's expanding like that. And so I'm not going to get into too deep into the history and all this, but it goes way back and even gets into breeding rabbits, believe it or not, but definitely not getting into that. I'm definitely not getting into all this math. I'm sure Dad could just glance at this and start teaching a whole lesson on it since he was a math teacher, but you can go and read about it in more detail if you want to. Probably not going to help too much right now, but you can go into the golden ratio. So pi, that also has a lot to do with fib. So the 1.618, we're going to see that pretty soon. Again, don't want to get too deep into this part of it. I want to show you some other fun stuff. So if you've ever Googled it, and under images, you're going to see things like this. You're going to start seeing where Fibonacci shows up in real life. And so who would have thunk it that the Mona Lisa had some fibs in it inside the picture? So you will see in terms of artwork, there's another classic one you can search for logos, but I'll show you that in a second. And all of our graphic designers know this pretty well. But whether it's space, you're going to see it in the way that galaxies expand and grow. It's basically the way that things grow and expand. You notice that number sequence? It was a growth and an expansion. You can see it in trees, in the way that, there we go, that was a really good one for that. Just the way that branches start growing as it expands and grows. It's fascinating. A lot of people call this the God code because it is throughout creation, it is everywhere. Certain vegetables, pineapples, sunflowers, it's phenomenal. You'll see it in our fingers in terms of the measurements in that, in our face. Let me do this, Fibonacci in logos, and you'll see how this is used everywhere because it's really pleasing to our eyes. There we go. You'll see what we have right here. I know Twitter and Apple, here we go. You see just the way that these circles and growth and everything grows and expands. It's used everywhere because our by nature, we're so used to seeing it. One more, I think, in our face. Let's see what comes up with this. I've never done this before, but here we go. Yeah, obviously some things are a little bit more warped than others, but you're going to see how there are certain things in here that cause, just the way that things grow and expand. And so obviously the markets grow and expand as well. So I'll get out of that, unshare this, and jump into the actual chart. So let me get back into gold. There we go. Share. Right. So this is this massive zoomed out chart. We're on a weekly right now. So let's do this. Let's go to the NAS. Let's start on the NAS. I've got a separate list up here I just created to mess around with that. I have no drawings on. So let's do this. Here is the NAS, guys, on a weekly chart. So first things first, Fibonacci tool. Top left, this entire zone right here, this is all fib stuff. The only one I am showing you tonight is the fib retracement tool. It's on my favorites bar. And so when you click that, you are going to be able to draw a fib retracement. So let's just do this. This right here, 24th of December 2018, there's a low. So you're looking for a low. Put my magnet tool on so it snaps straight to that low, dragging it up to that high, snaps to there. And I might just want to, yeah, we'll leave it there. I'll turn my magnet tool off just so I can grab that a little bit further, like that. So when you draw a fib for the first time, you probably won't look like this because I've got some different settings, but these are my settings. I've taken these from Curtis Cobain, one of the top educators on this, and he taught it to us mostly from the standpoint of long-term zoomed out investing. Definitely can use it for trading, but we're not using Fibonacci like this to enter our trades. This does not give near enough confirmation with this tool to enter a trade. That's what TrendForce is for. So we have Fibonacci inside of our moving averages and a few other things, but for now, this is the retracement tool. So these are my settings in terms of the different things I've clicked. So the 0, that's the top line right there. The 1, that's where it starts at the bottom. The 382, oh my gosh, they're all over the place. So 12.4, so these are percentages. You can change these to be represented in different ways with values. So it shows the actual value on the chart and then it says 0.124. You can change that to percents again, or let's have it there, that'll do. So these are the numbers I've chosen based on following Cobain. If you go to templates, you can create this template and you can save it and you can go back to defaults. I'm a little scared to go back to defaults right now because I'm so in love with this setup. Let me just have a sip of water quick. Oh, should have had a lozenge nearby. I'm not used to talking this much in one go, guys. Hopefully you're all good and tracking along with me. But for now, those are my settings, which you can copy. I love these. Dad's got a whole different batch of settings, and he can show how he uses fibs on another session for sure. He could teach this for a full hour as well, quite easily. So we'll save all of his wonders with fibs for another night. But for now, we've got 12.4 over there, then the 236. Sorry, my numbers are a little bit all over the place, but where is that 12? The next one, goodness, 236. The next one in there, 382. You can add these anywhere and color them obviously to whatever you want. Why they're all over the show, I don't know. Probably just copied Curtis Cobain exactly because I thought it meant something. The 50%, 0.05, that's a very important one. 0.618, that is our golden ratio right there. And then some other ones, the 0.786, very common number. I've got the 835, which is basically the middle between the 786 and the 886. Then the most important ones as well that you definitely want to have Where am I? My eyes, is my screen so small? 1.618. Please, please, please have 1.618. That's technically the golden ratio for the expansion and growth. And I'm going to get into that a little later. So 1.618, and then you want to have 236. So where's my 236? There we go, 236 right there. So that is how we can expect price to expand if price breaks in the other direction when drawing a fib from, in this case, low, high to low, and price going up. So at first, this is what you're going to see. You know, you can mess around with settings and things, but for now, that's all you need. So this is drawing from low to high. So normally when you draw from low to high, you're looking for a buy. And so if you were drawing this, you know, manipulation dip right here, this was COVID. So in this whole week right here was one big spike. So let me just check this out. So we've got our low, we've got our high. So then what? Where did price go to? Well, you can see the basic rules of fibs are once you break the 236, like once you have that much of a pullback, you can expect price to most likely come a little bit further. Like that's where you would say the fib is activated. So if price, for instance, came, yeah, as if you're drawing it there, it did break down to that point, and it did then come down as low as the 382. So when price bounces off the 382, that is what you would call a strong trend. And if price comes down to the 50% level or the 618, that will what we will call a normal trend. And so, you know, most of the time we have normal trends, but otherwise bouncing off the 382 is a strong trend. Bouncing off the 786 is a weak trend or a deeper pullback. So I'm going to put it back up there and show this. Let me just check the chat. Is it from the lowest closing candle or the high of the highest closing candle? Good question, Mark. So it is, you want to draw it on the wick of the lowest closing candle. So these are pretty even, Steven, so I'm just going for the lowest, and this is a weekly chart. So I guarantee if I changed it to a daily, the wick would probably be there. So just keeping this on a weekly chart right now, but you want to put it on the wick of the lowest closing candle. So Heiken actually doesn't help you right now. You want to have it on normal candles, which you can adjust up here. Normal candles is what I'm on. And I've also favorited Heiken actually if I wanted to change to those. So what happened here? Price basically came down, closed underneath that 236, and then the next point we're looking for was the 382. Now you can see price, you know, wicked below but closed above. Came back up, and that next week hit the 236, came back down. And then gap down, and this is COVID happening, remember? So we've got these gaps. And then we're pushed down lower to the 50%, push down lower, push down lower. So usually I'd be drawing some green boxes in here, which I will show you on a better example, but for now, I'll just do it quickly. So once a fib's activated, for me, I'm coming in here and I'm drawing a green box like this on my 50%, and I'll line it up with that high so I know where it's going in case I wanted to like delete the fib and remember why I drew that box. It's in relation to that high, but that's what I'm drawing right there. Then I'm going to draw another one. I will draw one at that 786, 886, because that's what I would call kind of the last line of defense if we're still going up, and I will change that to purple just to match my little inside color there. And so if price, you know, I'm putting on a replay feature right now, but if price broke and closed underneath that 618, then it's likely, right? So we've came down, we came back up, and this was a very turbulent time, but we bounced off the 786, and I don't think we ever came back. I think on most charts, if you are zoomed out on anything, whether it be gold or Bitcoin, price has never come back to the lows of COVID. One of the biggest manipulation dumps you will find on any chart. So that is low to high looking for a buy. So if you were trying to buy stock in the NAS or buy gold or buy Bitcoin, anywhere in that, you know, green zone, you know, you could dollar cost average in, and that would be great points to be investing. I know that you can correlate this to the VIX. That is a whole nother lesson, but where's my VIX? I've got it on a separate chart. This is just my, oh goodness, where is it? I'm not going to get into it now. The VIX is a volatility index. And when that spikes to certain levels, it shows huge volatility. Oh, I really want to show you this. No, this is worth finding. I'll tell you what, let me just search for it. Let me move this toolbar. I don't know why it's not there. Maybe it is and I just can't see it, but let's just do this. VIX, volatility index. Let's look at this quick down here. Bang. So this shows the massive spikes in volatility. So what is this one right here? This is, there we go, that's COVID. So the highest spike we have on this chart right here, at least in the last few years, is COVID. So when you might want to set alerts, if you're an investor at horizontal levels and go, right, next time we break these highs, I want to know about it. And you might want to set an alarm or an alert on that. Because look at that big spike back there, 2008. That's the GFC, guys. So 18 odd years ago, GFC spiked us up pretty high. Then we have all these other things in between. COVID, that was the yen carry trade in August last year when we had a big spike. And again, recently, we had a pretty big spike, right? That's all the Trump tariff news. So when these things spike, oh, sorry, my voice. When you get big spikes in the VIX, you get upwards in volatility or fear in the market, you get big dips on the other side. So going back to gold, you know, let's go back there. See that, just double checking that date. You can see for COVID, you know, look at that. That's the, you know, March, 16th, 2020. Let's go back to gold and you'll see where we were when the chart loads, because this is taking us pretty far back. 2020, well, it's back there. Anyway, it'll load for us in a minute, and maybe we'll change it to a daily chart to make this fib a bit more fun. Let's get rid of this and try and get, come on, what's happening? Trading views kicking the bucket. Okay, let's go to daily, drop down a bit. There we go, a little bit more action, and let's just try going back to the weekly and see if it likes me. No, it's not going to do it. Okay, well, it's fine because the daily just gets more accurate and looks even better. So let's do this. COVID, where were you? 2020, somewhere back there. Yeah, there we go. Check it out. Bang. That was those days in COVID. So I know some people that were basically in the midst of this, within 3 days of the bottom, because of the VIX, they unloaded all their capital somewhere about 3 days from the bottom. So that would have been 12th of March. When the VIX spikes like crazy and you get these huge dips, that's when you start buying into things like Bitcoin and gold and etc. for longer holds. And so I know someone that was dumping like a lot of their capital into the market there, 3 days from the bottom, which is still the bottom. Anyway, back to fibs. So what comes next? We were going low to high. Let's do one more low to high and look at what would have been next. So low to high, magnet tool on. The lows of COVID. Let me just check what I was going to do here. No, we won the NAS. That's why. Sorry, guys. Wasn't I doing that all in the NAS before? Let's just double check this. There it is. There's that fib. Sorry, thinking too much about gold. That's why. Okay, there we go. We're back. None of you realized that. Put that in the chat for me. That's okay. So we had this low to high, looking for a buy. That was in there. So what comes next? That is the pullback. Came right into that 786 and popped up from there. Next, what about an extension? So we've got our low. So once we broke this high, we could expect price to what? Go to price discovery, basically, at this point. So how do we predict where price might go? So I'm going to delete that, and I'm going to draw a fib the other way around. So drawing a fib from high down to low, like this, gives us those extensions up here. So this is where it gets pretty exciting. Now we're looking at price. And I like to do horizontal lines like this. I'm going to turn the magnet tool off. Sorry, clicked on my wrong window behind me. Magnet tool, there we go. Going to draw my line smack on there. Make him green so I know what he means. And I might even label him, 1618. Click on there, click on text, 1.618 extension, something like that. Then I know what that's all about. Might put the date on it based on when I drew it in case this is way in the future. Then I'm going to do another one over there on gold for the 236. And I'm going to make him yellow quickly like that. Not going to label him. But right now, if I wanted to, click him off, I can get rid of the fib and I've got him there. So I want to go back to the weekly. Check this out. So I think, remember, it looks, let's see. Yeah, there we go. Let's see. How did those do on the weekly? So what happened with price? Once price broke that high, we ran up, got into that zone. So we actually literally broke that high and smashed up to the 1.618, came down a little bit of a pullback, and then exploded up to pretty much wicked. Look at this, guys. Look at this. Okay, not quite there. Maybe other people were very aware of this and started to dump and sell before a mass sell-off. But sure enough, we hit that level, sell off, and then we broke that level, and then off we went. So that is what extensions look like, how you can draw the fib, and I'll do it for you again so you can see, but it's just drawing from high point to low point, and then draw, I could drag it across if I wanted to, but right there, if I only wanted to have it sitting like that, then I could draw those horizontal lines, and then that's where we could expect price to go. So what's next? Let's see this COVID low to high and see what was next in terms of sweet spot. So we'll get rid of those. We hit those extensions by a long shot. Let's do a low to high, looking for a buy. Let's put this magnet tool on, snap it to the bottom of that COVID dip, that high over there. So say this was our high, price has blown up, and say price over here started to blow beneath the 236. Aside from having some trend lines that you could do, like I like to use a ray tool like this, and I can do a whole nother lesson on that. But as soon as you've got a higher high, so before that high was there, if this was our high, your second touch point for your trend line would be there. But once this high was higher than that high, you can go to the most recent low before that new high. What happened once we broke that trend line? Well, a doji just to throw some people off, but then after that, we came down pretty hard. So I'll get rid of the trend line for now. But next up, rectangle time. So magnet tool off. I'm looking for 61.8 and the 50%. And I'm going to draw that across. Shink. Wow. What do you know? Price came inside that zone quite nicely, but you can see we 382. Yeah, we definitely came down, tapped the 382, bounced back up into that zone first, then came down. So you got to remember 382 is a level that is definitely respected as well. And so at the time, if you're blocking out everything to the right, you could have thought, wow, we're going to continue on a super uptrend. But having a MACD, especially our one, helps. What did we get on the weekly chart? We got a signal down on that doji, guys. Then the next thing, obviously we're widening and we're just coming down. So anyway, we'll turn that off for now. Having TrendForce obviously would have been beautiful too, but we'll leave that off for now. Just showing you the zoomed out fibs, but green zone, we've got a green zone there, and obviously nothing came as low as that level there, but may have drawn it, but leave them off for now. But as you can see, price came right down into the normal zone. So if we bounced off the 382, that'd be a strong trend, which we did have, but this is showing us at this point that the trend is weakening. So next would be a normal trend. This is the normal pullback for a normal trend. Weak trend again was, this right here was quite a soft, you can see the difference, right? We're going up, we're going up, we're going up, huge manipulative pullback, and it pulled back into that lower zone. And then this just exploded post, well, not post COVID, but kind of in that COVID time. And then in this zone right here, this is the Nasdaq, remember, that we're looking at. Huge opportunity for buying shares in the Nasdaq. I mean, down at 11,000, and we're trading right now at 20,000. So price from this zone is pretty much doubled when zooming all the way out, right? So that would be a normal place to look for price to pull back to. Now, why am I showing you guys this? Because we scalping on the 1 minute chart. I have these levels drawn up so that, we might be living up here for a week or two or three or four. This is a weekly chart, remember. But I like to have this green box on my chart waiting for me if price is on the way back down. Because if we're here one morning and I don't have this green line on my chart, price might decide to bounce off, 11,681 for whatever reason, which it did. It wicked like crazy. Let's just go to the daily so we can see this in a bit more action. Could even go to a 4-hour chart and zoom way more, but it might stress out. Here we go. It's loading for us. Let's see what that looked like. And just because I like to have these fib levels on, look at that. Price came down during that day, wicked the 50% level. We got, MACD on the daily. Obviously, if you zoomed in on the 1 minute chart, you would have seen a huge wick, and then price pushed up. And these aren't little bounces, guys. From that touch point, price came up 900 pips before it then reversed back down. So, I'm showing you this on the weekly chart to show you how powerful it can be for long-term investing, but also being aware of these levels for what we're doing. So that was that fib. Low to high, from the low of COVID to the next high, gave us this normal zone for that, zone that 50 to 61.8 or 60. So this is a 50% retracement. So it says 50% there, but basically price ran up and then it pulled back 12% or 12.4, 23.6, 38.2. It pulled back 50%. This measured move from that high to that low is a 50% pullback in terms of this entire move. It's saying on that ruler right now, if I measure it, that it's a 30% pullback. That's in kind of 30% in the asset overall, not so much from this low point. So pulling back 50% to there, 61.8 to there, 78% to there. Obviously, if it pulled all the way back to this bottom level, it would be a 100% pullback, and it's pulled all the way back. So let's load it. Let me just check the chat for a second. Will you talk about how to enter and where? Mark, yes, that is TrendForce. We're going to use TrendForce for all of our trading and entries. I'm showing you fibs so that you can have a zoomed out perspective because fibs does, like using this fib tool, is not enough information for you to be entering a trade with a tiny stop loss like TrendForce gives us. So this is a completely different, this is just a very useful tool to have in your tool chest for being on the charts and zooming out. So in case you're wondering, how do you know which fib to enter? All right, Dan, you might have to clarify your question to me, but basically, if we're going low to high, sorry, maybe it was a question around entering. So if you're buying, this is the thing. This is not a scalping strategy I'm showing you right now, but this is a zoomed out chart. If you were wanting to buy the Nasdaq right here, you might say you had $1,000 to invest. Price has pulled back to the 50% level. You might want to split and dollar cost average. So maybe you want to buy $500 worth there and save another 500, save some dry powder as they might call it, for if it pulls back deeper. And so if price comes back to the 61.8, you now bought 500 bucks worth of the Nasdaq down there. And so your average price is going to be the average between the two, which will be, somewhere in the middle. But it just means in case you bounced off the 50, you got some skin in the game. You were able to actually, build your portfolio a little bit. But if it comes back lower, you're stoked. You still got something to invest and you're ready to go. And if price comes that low, well, that's when you might be crying a little bit and waiting for it to continue on its trend. But that is how I would approach this. So let's check some more. Let's check some pretty cool levels. So COVID, we just select the low to the high, the sweet spot. What about the high to the low? So let's get that fib off and let's do this high. So we've gone low to high. What about this high to this low? So, and look at that too, guys. Sorry, just look at this price action right here. This is the daily chart that we're looking at right now. Look how price bounced it, came into it, came back down, wicked the bottom, wicked the top, or rejected, came back down, wicked the top, broke above. And these candles, it is significant where a daily candle closes and obviously a weekly as well. But just where they closed, like Doji, came back down, wicked it, rejected it, closed above, one more test. And obviously there's I can tell you right now, I can see things. So check this out. This is a daily chart, but I can't help what I'm seeing. So from there, check that out. There is your rejection, come back down, pull up, break above, come back, retest that trend line and that zone, and then it was gone. And price has never come back to that level ever since. So anyway, you just start to see those breaks and retests over and over again. But I love how then we had one more touchdown, bang, on top of the level, and off it went. Anyway, so just had to show you guys that. Price action is absolutely phenomenal. So now let's look for a high to a low for an extension so we could figure out how high price is going to go. Magnet tool back on, Fibonacci tool on the high, and let's go in that one. That is, I can't see these wicks, so let's just go the weekly for a second. So I can get a bit more accurate on you and figure out which one is the lowest closing, highest closing. I was on it there, so that's correct. And in terms of which one of these, I'd say we're probably fine to go off that ultimate low right there. That one definitely closed. So there, woo, check that out. Interesting. Price is sitting right on that level right now, guys, in terms of the NAS. So check this out. Extension tool, 1.618 or 161%. Let's make him green. Let's do this. And let's do one more because we're not actually there yet on the 236. Make him yellow. But check this price action out, guys. So this is the NAS on a weekly chart. As you can see, once price broke, let's just take this fib and draw him out a little further so you can see what was going on. I mean, look at that. Now you're starting to see some price action, right? Now remember, when price is likely to, how do I explain this? When you're drawing it from low to high, you're also looking for something else first. Before you're looking for extensions, you're also looking where price might be able to continuing down. So say we have, let's see, perfect, right there. Say we've got price moving down, where is the next zone that we can expect price to continue to go down? Well, once price came up, just like it did over here, it broke above the 236 with this giant green candle. Well, next we want to make sure we're aware of that same level, but the other way around. And I like to make these red boxes because this is where price might reject from if it is heading the other way for a continuation. Price came down, came up, hit our normal trend zone, normal trend, 50 to 61, and then came down further. So that was a point of rejection. Then what? Next low, let's draw it all the way down there. I'm drawing this across because I want you to be able to see this. So now this is our low, and price has come up where? Well, now that happened, but now also once we've broken above here, where's next? 50% level. So nothing, we've kind of blasted through that and turned it into like, well, really that became support because price smashed on top of through it and came back to it. But right here, this is an important zone, 786, 886. That there gave us a rejection. And on a higher time frame, this is a big deal, guys. Like this is a daily chart, remember. So now I can see what happened. Price broke through that level, came up to that 786, 886 zone, and gave us a pullback back into that zone again, and support was found, and up we went. And then once we cleared this level, which is our 100%, let me just drag that over so we can see it a bit clearer. Right there. And I'm going to drag it further because we can see that price came back and retested it again. So once let's just get rid of that. There we go, make this a bit bigger. Once we cleared the recent high, the highest, basically what was the all-time high on the NAS, once we closed above that, we had, just checking, closed above, came back down. We didn't, well, basically we closed above, pushed off, came back. We didn't quite retest. Often you'll see price retest a high like that. It didn't quite come low enough. But then where was the next stop? Bang, 1.618 extension. Tiny pullback on the way up, but really this thing on terms of a daily, it moved. And from breaking that high, that was 3,900 pips up to the 1.618. So you'll often see how price, once you break an all-time high, it's not clear sailing, like obviously it went up, pulled back, but the next stop in terms of a major strong trend is going to be that 1.618. So there we have almost 4,000 pips up. Then we got a pullback, obviously big doji candle, weekly. These are weeks, guys. Weekly doji pulling back. Probably had some big divergence. Yeah. Anyway, I won't get to that right now. And then up we went, a little bit higher, double top, and now we've pulled back. This is us right now, guys. This is week to week on the NAS. So I just gave you a history lesson on the Nasdaq, but here we are right now at the top. We've hit the 1.618. We have not yet hit the 236. But what else can we derive from this? Well, we also had this big pullback here where we found support, and I would say, well, there's a bit of some weird things going on there with gaps and where that candle closed, but on a daily chart, let's just see what that looked like. Yeah, so on a daily, that candle is green. So that means it's kind of weird. This red candle, this day closed, and we gapped down probably at the beginning of the week, Friday, Monday. Yeah, so we gapped down, but then we closed. So just because it's opening underneath. But anyway, all that to say is we didn't close underneath. We just bounced off that recent high. So then, is there anything else we can draw from this chart? We've got those extensions up there. Whoopsie daisy. Let's just actually delete that fib, get it out the way. We've got our extension levels. We've hit that extension level. We've got our next one already lined up. What else can we see? Let's see low. Where are we right now? Let's see if we could have predicted anything else. Let's see. Let's check in the chat. Yes, thanks, Mark. I'm on the weekly. So let's just check this out. In terms of other pullbacks, we had this to there. In terms of high, yeah, well, we broke that level right there. So no, where are we? I haven't done one this way yet for a pullback. So let's go. We did high to low, got the extensions. Now we want to go from low to high because now we've got this big high up in front of us. Let's click our magnet tool on. This is tiny for my little eyes, but there we go. And in terms of that, holy smokes, tell me you can see that. How's that for a pullback? Bang on the 50%, which also happens to be pretty much our recent key level to the left. How phenomenal is that? So price running up, creating an all-time high. I wonder, I'm just curious. I just want to check this. So when this was our all-time high, where do we come back to with that pullback? We broke the 236 and we didn't quite come down to the 382. So the strong trend was still motoring. That MACD was at that point turning and coming up, but coming into that all-time high, that is phenomenal right there, 50%. So guys, daily chart right now, but I think you're getting the picture in terms of the normal place to pull back to on a higher time frame. So we pulled back to that. I mean, this is recent, guys. This is like the 7th of April. This is last month. So this giant pullback, huge reset, coming back to this zone. I probably did, or I definitely did on gold in terms of having these kinds of zones marked up in green. Mark, you're clapping. I can see you on my right hand side. And guys, I did not invent this. This is just the way the market moves. But if you were trading the NAS, which I haven't been paying too much attention to, I've been focusing mainly on gold. As soon as this high was in, and as soon as we broke, that 236, guarantee I would have had this green box drawn up. And if we were coming down here, I would have been waiting for something, a reaction or some sort at that level. So key level 2, you can see there, we pretty much stop hunted something. I mean, oh no, can't put on the sessions indicator on the daily. Those are all different sessions, but we bounced. So where else can we see this, or where else can we draw something? Hopefully this is helping you guys on the NAS. I mean, look at that MACD as well. That MACD is cranking right now. So nice and wide, pushing up. I mean, I'm not really seeing much in terms of why we should be getting out of that, but let's just see. Yeah, we're still, that's a nice, trend zone. TrendForce is doing well. But right now, where are we? Let's get rid of that fib, because we've already got that high, low to high, and we've pulled back for that buy, and that's ripped up. What do we care about right now? Well, now we care about where price might reject us on the way up. So drawing from high to low would be on that little zone right there. And I like to have my numbers. You can see that I've got the numbers. So it says 16,290. So if I want to move it over, I can get pretty close. Honestly, guys, like my Bitcoin chart, I will right click on this thing. I will click settings. I'll go to coordinates, and I will highlight the exact candle that I want to go on. I'll look at the top left up here where it says open, high, low, and close. I want to know what that low was. I'm highlighting that wick. I'm seeing whatever that exact level was. So when I magnetize to it, it tells me exactly. But when I'm drawing these higher fibs, I am getting these coordinates bang on to the pip. I am not messing around. I'm a little OCD, or how does Joe and Dad put it? CDO, that was the one, for getting those things lined up. And so check that out. Look at this. So right now, in terms of going downwards, we would have been looking for rejections or reactions around this level here. We had some action. I'd say something happened, but yeah, there. I guess that was actually the first place. Check that out. Price came up, green candle, rejected hard, came back down, bounced off that 236, pushed up, and now cleared the sweet spot zone, gapped up, and now what have we rejected here? Let me get rid of the MACD. The next zone is our 786, 886 zone, where we are sitting right now, ready to potentially reject. So that is my little purple zone right there. I can delete the fib, and now I know that price is going to hang out. We might come back down and bounce there. Remember though, we're on the super key level right here where price extended to, which is that 236 that we drew from that high to low. And we're sitting on it, guys. Like, we're literally sitting on it right now on this daily chart. We're just above. Actually, we might not be that close if I zoom in, but it looks close. We are 20,688. Yeah, what is that? 70 odd pips away. Price coming down, 4-hour chart. Look at that, man. NAS, 4-hour buy. I guess that when that fired off, look, we don't really take trades. Look, these stop losses are super tight, and it's designed for our 1-minute chart, guys. But if you are investing and you're getting a good signal that meets the rules, then awesome opportunity right there. Obviously, TP3 hit. Anyway, I'll turn that off for now. But yeah, that is where we are right now. We're in between zones. And so for me, I just like to be aware of these fibs. Now, what I just drew out for you is obviously quite a lot of info. And in terms of that checklist that we spoke about, that for me, I just, where am I? In terms of this, I saw the checklist and it disappeared, probably because I'm zoomed in too much. When I'm saying on here that I'm checking fibs and high time frames, I've already drawn those fibs. I'm not spending an hour doing it right here. I do that once and then I don't really have to do it again, but I'm checking, I'm aware of, or I'm saying, okay, where are we? And so going back to that other chart, I mean, I can do this on gold, I can do this on Bitcoin, I can do this on anything. But time is, wow, it's already 9 o'clock. My word, that's why my voice feels like it does. But Bitcoin, oh my goodness, guys, I can tell you right now, Bitcoin respects the stuff like you won't believe. So everyone thinks like, oh my goodness, Bitcoin is so scary. Let's just do a few more for fun. Going right back here, this is 2017 when I was not watching it, and I wish I was. Bet you all of you do. High to low, I need to turn off the magnet. But where did price pull back to? Check that out. From lows to highs, we came down into the last line of defense, broke up, came back down one last touch, off we went. Once we cleared that zone, let's have some fun. I mean, those extensions got destroyed. if you were doing that from, you know, high point to low point. Yeah, destroyed that one, pretty much worked that one, bounced up it went. Let's just get to a little bit more where we were. So COVID was down here, high points up here, going across. Well, before we even had that, I mean, you'll see this on every chart, but say we were there, price came into that zone, and then up here, there was our 50% zone there, drawing it all the way across, came back down, hit the 786 at 17,000, bounce, 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 and just dipping inside. And you can see how it's pausing, right? It's just, well, blowing through some zones, but you're going to see action. You're going to see wicks closing or smashing into these zones. And off it goes. But how's this? I want to show you some cool things. So extensions from, these are things you can be aware of for the future still if you're in Bitcoin or wanting to be, for targets, low to highs, high to lows. You can see again all these different zones where price is respected. There was an extension. Once we broke above and formed new all-time highs, 102k, oopsie daisy, was a definite target. And the next one up there, 142. I'm going to get rid of that. Let's zoom in even more. Let's draw one on all this range. We were stuck here for 8 months in this range. Check this out. Magnet tool. Let's go to a daily. That was a weekly chart. Let's see how price respects fibs. Let's see. There we go. High point, low point, 1.618. That candle smashed up like no one's business. That's a daily. That candle right there was a 9,000 point move on Bitcoin to hit that 1.618 extension. Did we hit the 236? Can anyone tell me? 107k. Check that out. Now, you can't tell me that Fibonacci hasn't got something to do with this. So that right there was the all-time high for a good amount of time. And then, anyway, Trump came into office and there was a big sell-off and we're coming over there. So that's how you can, once you break certain levels, predict where stuff's going to go. So what's next? Well, let's get rid of that fib and let's just draw one more. Let's go. That's our big low. That right there is the yen carry trade. That's when the VIX spiked in August. I need my magnet. Let's stick him on that. Sorry. Let's do one more. And stick them on there, and our most recent high is going to be there. So just draw them across. Prices came down, basically bounced into the normal zone, right, guys? After a huge run up, people freak out and think, oh my gosh, Bitcoin is dying. It's going from 109,000 all the way down to wherever that was, 74. All that was a generational wealth buying opportunity last month to dip in under 80k. And then we're back up. So what's next? What we care about is what's next. Let's go one more. Let's go high point. Just missed the wick. High point, low point. And what do we have? We have a rejection zone right now. That's where we are literally sitting in. So opportunity for profit taking, maybe a little bit of rejection. We've already spent a bit of time in that zone. So if people thought that we were heading into a bear market, they might be stoked to sell off right here. I think that's the dumbest thing in the world. Sure, I could be proven wrong, but I just have a long-term perspective on this thing. And yeah, price could reject you. We're in a rejection zone. We did push up above it, but you can see that we have just kind of, you know, we're not in calling all cards, get off the bus mode yet. But what we do have is our extensions. So the next few targets that we can be expecting are 130 and 156 up there. So if you're holding, then, you know, history tells us, you know, we're not horribly wrong to expect 130, 156k Bitcoin. I've seen far bigger predictions for that. I think Larry Fink from BlackRock is calling for 280k this year because he's telling everyone to allocate up to 5% in their big hedge funds. But anyway, that's a whole lot of info on fibs. So what am I saying here, guys? It's not financial advice, but even buying Bitcoin right now at the high, there's still 28% growth, you know, 50% growth. This is something I want to highlight for you with Bitcoin, and I care about this a lot because I'm in it a lot, and I understand the adoption of this and why it's a good idea. But even if you bought, and I've said this to a few people in conversations, even if you bought Bitcoin at the high of the previous cycle, and it runs in 4-year cycles, this is not a Bitcoin conversation, but I just feel like I've got to say it, because even if you bought at the high and you didn't sell, say you went through the garbage of a 77% pullback, but you held. Right now, 2 years later, you're still 49% in profit today. So if that was 100 grand, you've still made 49,000 on your money if you bought at the worst possible moment in the previous cycle. I'm saying that to say, even if you bought right now, and this is the worst point, I don't think it is, but what I'm trying to say is, even if you bought right at the high, you're currently down 6%, but you know, the next, all you got to do is hold, and the next cycle will bring its thing. Anyway, that's enough waffling from me. That is a whole lot of fibs, lows to highs, and everything in between. Thanks for tracking in the chat there, guys. So anytime is good time to buy. For Bitcoin, there's always good times to buy, better times to buy, the most ideal time to buy. The most ideal time to buy would have been obviously, 10 years ago. But if you're dollar cost averaging, if you've got X amount to invest and you're looking at this thing like a long-term thing. So I didn't really get, so for me guys, in terms of those fibs, I just showed you weekly, a daily, a little bit of 4 hour. Day to day, in terms of incorporating into my daily checklist, I'll be looking at the 15-minute chart and checking in. Let me do one more. I'll do one more quick share because this is what it looks like day to day. So let's just go back to gold, or let's do NAS. So let's drop this down to 15-minute chart. If this is the NAS right now I'm looking at a 15-minute chart. Now I'm looking for, okay, where's our most recent low? Well, it's still all the way down there, but most recent low might be, okay, on this move, we bounced up quite strongly from there. This is not really the right way to do it, but I'm looking for the move that we're in right now and going, okay, if that's our low and if that's our high, what's next if we pull back? Well, if we pull back, then that's our next zone to maybe expect. So I might leave that on my chart, and that's going to be green like that. And then I'm definitely marking up this zone because that's a gap. So we've got a huge gap right here, and so this is definitely, it's interest for that. Obviously we've got this 50% level lower down here, but I will turn my magnet tool on, and I've already done this on my other charts, and I will magnetize that to where the gap started, and I will magnetize this to where the next gap, where it started there. And now this, I might make white, and I will sync that on every single chart so I know that that's a gap. And so there's a lot of reasons why gaps get filled. There's an imbalance. Price wants to come back. There was a lot of buying that came in over the weekend or while the market was closed. Basically, there's a lot of demand down here, and so a lot of orders that didn't get filled. And so it's very likely that price will return. I think 48% of gaps get filled on the day. If not on the day, then it could be weeks, it could be days, it could be months. But either way, that's how I do it. So on a 15-minute chart, that's not a great example. I don't really like that low in terms of what's going on here. But anyway, kind of gives you the idea. Gold might give us something better on a 15-minute chart right now. Yeah, there we go. So in terms of this, what do we have? And we're definitely running on for time, but we've got a low and we've got a high. We have bounced off that 236 level, but let's just say we were going further back and it was like this high. Then right there, I would be looking, you can see there, price did come down to that 50% level, 61.8. And if we're going up to that high there, well, now I'm waiting. Like if price does come lower down, I might just be aware of this zone. But aside from that, guys, I'm relying on TrendForce. Like I just want to be aware, like, is there something happening here? Like what is the market telling us? We've got the MACD crossing down. We've got, we're sitting, the moving on a 15-minute chart at least. But it wouldn't surprise me. The POC's there. It wouldn't surprise me if price comes back down. If we break this trend line, there's demand down here. So that's how I am using it when I'm, day to day, because I've got those big zoomed out fibs drawn on the 4 hour, the daily. Once you draw those, you don't have to redraw them. But in terms of the 15-minute chart, that's where I might just look and go, okay, we've got a low here, we've got a high here. Here's a sweet spot. And I'm looking for confluence. Like what else is sitting at that zone? Is it the 233? Price often will come back to the 233 for a bit of a reset before it continues on that trend. So if that 50 to 61% level is sitting on that 233, then that's another layer of confidence to me to say we might bounce from here. And I'm not just going to click it buy just because, or click trade. Oh, my voice. Just because we bounced into the 50% level, it just gives me another level of confidence going, okay, right, now we have a buy signal on a 1 minute chart. It lines up with a 3. The trend table's all green. We've bounced out of a fib zone. That's it. And I'm not going to leave all those things on my chart. If you start drawing all those extra boxes everywhere, on every time frame, you're just going to have lines and boxes everywhere. Try to keep things to a minimum. Try to lower the opacity and just play around on a high time frame, guys. A lot of what I showed you tonight is very, very handy for long-term investing. and looking for extensions for when to take profit or when to exit the market. Definitely still usable day to day, but none of that gives you good enough confirmations to actually enter the kind of scalping trades that we use with TrendForce. So Dad utilizes fibs like a ladder in a different way on a lower time frame, very, very zoomed in on the 1 minute chart. And so he can do a full session on that, or half session, whatever, when he is better. Otherwise, that is a ton, way more talking than I thought I would do. Let me just check. Do you generally use the weekly for your fib markup? Yeah, so weekly and daily in terms of where those candles are closing. The only rules to be aware of that I've heard, far smarter people talk about is you want to snap it to the wick on the lowest closing candle. So there might be longer wicks that are lower, but whatever candle closed lower, that's the one that has more authority. And you can zoom into a daily chart to refine that if you want to. So anytime is good. Sorry, that was Zeph. Thanks, Ty. Thanks, Elise. Jeremy, just amazing, Ty. I love DCA with Bitcoin. Yes, there we go. Cool. Thank you. All right, this is on actual candles. Yes, Mark. Heiken is not going to give you the right info to be able to draw. You're not going to get any wicks on bullish candles on the bottom. So normal candles for drawing those big fibs. I mentioned that somewhere in there. Otherwise, guys, it's after 9. We got pretty late. I went way longer than I thought I would, but I hope that gives you the full thing on my daily approach to the charts, and at the same time, a whole deep dive on fibs and how I use them on that zoomed out process. So thanks for the encouragement, guys. Really appreciate that love and appreciate all of you. We will be here on Friday morning for live analysis. Pray for Dad. He needs some healing, and we'll cut it there for now. Otherwise, have an amazing rest of your night. Trade safe, and we'll see you on the chat. All right. Good night, everyone.